welcome to TheoTrade. This is Don Kaufman. September 25th, 2020, doing the weekend update here on a Friday afternoon. It is not a bottom until Big Tech says it's a bottom. We're going to dig directly into the Nasdaq, some of the sell-side activity we saw this week, and just downright sketchy, large ranges throughout the course of the week. Let's get right into kind of the crux of this weekend's update, and that's this. The Nasdaq outperforms in yet another sketchy trading week, and we had just massive daily ranges. Let's actually break it down through a couple of different means that I want to bring up to display that, I really don't think that this is a bottom. Now, again, just sitting here and saying to you, I don't think it's a bottom necessarily. We're going to provide a little bit of evidence around that. So as I start this, again, the Nasdaq actually outperformed, and the way to display that, and again, that's on a weekly basis. The way to display that is to apply my auto expected moves. And when I apply the auto expected moves, what I'm actually applying to the chart here, and I'll zoom in for just a moment. I'll go ahead and close up this left side bar. What I'm actually applying over here, these are the weekly ranges that pertain to the options market. You can see already, this next week, the coming week, is already displayed. And that's actually being derived from looking, if you will, at, next week's option chain is about plus or minus $9.35 move. That $9 plus move is actually being applied specifically to the chart. So in doing so, one of the nice things that the expected and auto expected move indicator does is it actually plots three lines. This is actually the starting place of the week. It's the upper edge of the expected move and the lower edge of the expected move. And the reason I wanted to start with this, when I say the Nasdaq outperforms, hey, just do yourself a favor, compare it over to the spiders. Okay, so the spiders actually breached the lower edge of the expected move on, really Wednesday, Thursday, pop back to the upside. But again, and also in huge contrast, if you take a look at like the IWM, the Russell just got crushed. I mean, this is like a 2 deviation move outside the expected move. That is big. So one of the first things is, people are clearly talking about maybe a little bit of a bottom is in. And again, I disagree, because the sector that has been leading some of the sell side activity, really didn't see any wicked trade, if you will, to the downside. Now, that's a little suspect. Let's actually go further than that. So again, the Nasdaq outperforms in a really sketchy trading week. And what do I define as kind of sketchy? Look at some of the ranges this thing threw off. Now, that's the QQQ, and I don't think that's necessarily fair. So I'm actually going to bring up the Nasdaq futures. Now, again, when you start looking at the Nasdaq futures, this too, that doesn't really do me any good. It doesn't do it justice if you don't look at Nasdaq futures on a day-to-day basis. But these are huge, people. Huge ranges sequentially, just again back to back, day after day. Here's a range, and I'll just roughly give you this range. It's 10,800. I'll clear up to 11,220. Come on, what's 400 or 500 points amongst friends inside of the Nasdaq? Obviously, that's one of the larger ranges, but we were continually throwing off 350 point ranges inside of the Nasdaq futures. Okay, so where are we going with this? Well, let's actually pull up the S&P futures for a second. The S&P futures were also staggering. And the reason I say that the S&P futures, the range was staggering, is this week that just passed, and again, I'll kind of highlight the week at large. This entire week was expecting, according to the SPX, approximately an $83 expected move. That's the week that just passed, right? And in fact, we'll even talk about the SPX, the expected move. And it was this last week was $83. $83? Come on. We were getting $83 ranges each and every single day. It was wild out there. So how does that pertain to, possibly a bottom in the marketplace? Well, again, the one thing that you really needs to resonate when I'm saying that, all right, the massive daily ranges, thing that needs to resonate over there, those ranges have not abated at all, okay? Which is an indication that volatility is not necessarily dying down. We are possibly well overdue, if you will, and I'll cruise back over to the QQQ here. Might be well overdue for, that quintessential rip your face off rally, because quite frankly, have you seen one yet? Because I sure haven't. And when I talk about like a rip your face off rally, people, there's been some pretty drastic sell side activity here. That's steep. And I'll tell you what, over the last 4 weeks, we haven't had that wicked bounce back. This is just meager, right? The other aspect I want to bring to your attention, because the Nasdaq, all right, is outperforming. This is what initially had led the sell side activity. And so people are looking at this and thinking to themselves, yeah, well, maybe the Nasdaq did already bottom in here. Again, did it really? Did it bottom throwing off huge ranges? Did it bottom on what I would also constitute as rather low volume? So now we're talking a little bit about expected move, the monsters of tech. What are the monsters of tech? You start looking at the individual monsters of tech, right? In fact, you know what? I'll zoom out for just a second. I'll use Microsoft, and then we'll go over to Apple and a couple of what we term the monsters of tech. The monsters of tech, okay, which is the complex of, Microsoft and Apple and Facebook and Amazon and Google, and we've actually created our own symbol for that. But the monsters of tech, let me ask you something. I see some sell-side activity in here, but did you see any spike in volume? Because I sure didn't. So I see no spike in volume. I see some wicked ranges being thrown off here. It just keeps getting better. And then we'll look at volatility. And when you start looking at volatility, this is the implied, vol ranking. Well, lo and behold, the implied volatility, it hasn't moved. So we're not seeing a spike in volume. We're not seeing a spike in implied volatility. The ranges are still absolutely ridiculous in there. Tech needed to dive. It needed to die, okay? It needed to roll over. It needed to get ugly. None of these lead me to believe that they're going to be ugly. And again, strictly my opinion, but for what it's worth, let's go take a look at Apple. So Apple, kind of the same situation. Is there a little bit of an increase in terms of overall volume on a day-to-day basis? All right, you got me there, okay? But it's fairly mild. Like, again, you really can't tell most of these trading days apart from, trading days from midsummer. People, it's September. It's about to be October here. Cruise over to Facebook. Facebook, volume, nothing. Okay. Amazon, volume, absolutely nothing. Then we actually flip over to volatility. Okay. All right. Here we go. Got a little bit more volatility inside of Amazon, except for the fact that Amazon's volatility was actually falling when the stock was falling. And again, the volatility really isn't necessarily rocking, but it's about the best you could do. Again, you take a look over at Apple, lackluster here. Take a look at Facebook. I mean, Facebook, nothing, not gonna go anywhere. All right, all of these factors, and again, I shouldn't leave Google out in the cold, but Google's volatility is extraordinarily low. All of these factors, again, believe it or not, you put them together, and again, it's not a bottom until big tech says it's a bottom, and that's really I wanted to start. And I'm going to reiterate a warning from last week, and I hope you guys appreciated the warning last week. And I'm going to reiterate the same warning, and this is now the third week in a row. Don't buy the dip. And it's not that, and again, I want to make this clear. I said don't buy the dip. It's not that I don't believe that we're going to bounce. I absolutely, unequivocally believe we're going to bounce. We're not done yet, not by a long shot. The factors that I just stated over here, in conjunction with a few other factors about to display to you, just scream to me that this marketplace has got, it's just getting warmed up in terms of volatility. And that volatility really has to spike. I mean, net, you got to see something ugly happen to this marketplace. I mean, hideous to get that volatility up, because there isn't that feeling, if you will, of capitulation in the overall marketplace. And that's what makes a market. Again, as a trader, you look at more than, at least me, I look at a lot more than a single chart. I'll never look at a Microsoft and pull up like an RSI, Ligier, and like, okay, it's very oversold over here. Of course, it's oversold on a daily. I mean, this thing just got slammed down. But you start bringing this stuff up on like a monthly, it's still in wildly overbought territory. Again, the chart will show you anything that you want to see. And by looking at other factors like implied volatility ranking, by looking at some of the volume out there, by looking at the expected moves, the sheer fact that, again, the sell side activity wasn't led, if you will, by the weakest sector. I mean, ironically, this week, the sell side activity was actually led by a completely different sector. And again, none of these things add up to, coming to a bottom. So with that, I'm going to further this a little bit. The aspect I was just referencing is, underperforming sectors like the Russell. Underperforming sectors are, underperforming. And they're still, again, if you look at the year-to-date percentage on the Russell, it's already down, 11+% over here. You take a look at the financials. The financials really got whacked this week. It was ugly out there. They're down about 24% now on a year-to-date basis. But take a look at the financials in terms of auto expected move. They smashed their auto expected move. Like on Monday, they'd already dropped below it. Of course, there was some news on this front. But again, this is not the way that you form a bottom. The divergence continues to grow. When I'm talking about the divergence, I'm talking about the S&Ps versus the Nasdaq versus the IWM. That divergence should actually contract, not widen. And again, to display that, if you'd like to see that, of course, visually, I can come in here real briefly and show you the QQQ. So you bring up the QQQ. I'm actually going to drop down to style and load up a very special style. This is QQQ Spiders IWM. And what I'm saying here in this comparison chart, and I brought this up extensively lately, on top over here, that's the QQQ, QQQ, okay? These must converge upon one another at some point. And not only didn't that happen this week, they actually diverged very slightly apart from one another. And again, all of these factors just keep screaming, it's not a bottom, it's not a bottom, it's not a bottom. So I'll snap back over here. That's IWM. We just looked at the XLF. But we also, let's look at energy. Energy just can't catch a bid to save its life. Things down 50%. I'll tell you what, inside of energy, I found one great opportunity. Throw this out to you guys, but this is one that I actually fired out. I bought premium. I bought premium inside of the XLE in the form of a gamma iron condor. For those of you that are clientele here at TheoTrade, of course, I text out that trade to you. Why did I buy premium? Look, huge sell side activity in here. The volatility just can't get off the floor. I mean, this thing's just trapped, which once again, when we're talking about let's find a bottom in here, I mean, come on, how ugly do you have to get? This is a product that's already been down to 22 and change earlier in the year, and yet here we are, down 50% year to date. And I mean, the percentage slippage that we just saw in the last couple of weeks, this thing it's ugly, and volatility won't pick its head back up. Again, I don't think that bodes well at all for some of the marketplace in general. All right, moving down the list, some of the usual suspects over here. A couple things I'm also going to shift to that would make me a little bit nervous, and believe it or not, this has a lot to do with finding a bottom as well. Look at the dollar. Now, many of you probably do look at the dollar, and because it probably impacts some of your gold and or silver trades, the movement in the dollar. So I can't necessarily sit here and again, I'm not going to preach to you that I think the dollar's going up, because I don't necessarily think it's going up. But I do actually think that the dollar has a lot to do. It's kind of a new volatility indicator. And when the world is feeling uncertain, when the world's getting a little scary out there, what do? They start buying dollars. This is going to be an interesting trade because, again, we have a lot of quote-unquote gold bugs that are out there. That dollar continues to rip. It's going to continue to put pressure on gold. So there's a lot of people right now thinking to themselves, this is the dip of a lifetime to buy inside of gold. And I don't think you can look at the gold chart and discern anything from gold. I think you have to look at the dollar. And if the dollar continues to rip higher, you're going to be in a lot of trouble in gold. And again, I want you to know that I don't have skin in the game for the dollar, and I don't have skin in the game in the gold right now. I'm interested in buying gold at some point, to not as a hedge for the S&Ps, forget that, a little bit as an inflationary hedge, okay? Because again, things could get very nutty in the next couple of weeks. There is an election coming up. That's only like one of the smaller points in some of the risk that's headed our way. Nevertheless, if the dollar continues to rip higher, I think it's a fear trade. I mean, who wants some euros right now? Nobody. Things are getting dicey there. We're talking about a no-deal Brexit again. Things are getting dicey there. I mean, it's just every currency that you can pretty much dream of. It's a little scary. And again, I believe that the purchase of the dollar is absolutely a fear trade. Speaking of fear, the other thing that doesn't really resonate with me, and this is one that I have more questions than answers on, is looking at the VVIX. Do you realize that since COVID hit, this is the lowest, really the lowest closing print, okay, of the VVIX. And the VVIX, once again, this is the volatility of the volatility index. Once again, it's called a VVIX. This is not a tradable product. Basically, what it's saying is the volatility of the volatility is extraordinarily low. Again, I have a huge question on that one. I'm going to give you my kind of, synopsis of what I believe is going on in here. I think we have an incredibly retail-driven marketplace right now. The professionals, they're out there, okay? They're stalking all the retail traders here. They're filling order flow, but they're not actually stepping in. They're not really leading, okay, this marketplace around, that it's heavily retail driven. And in seeing the VVIX drop, for the most part, it's not that the professionals aren't engaged, is they're just reacting to what retail is doing right now. And as such, volatility has kind of fallen by the wayside. So it's not, I'm shocked that the VVIX is under 100 here. Now, again, do not necessarily and per se take this as a bullish indication. Take this more as an opportunity. The volatility is inherently low, which makes me kind of believe that there's opportunities in VIX. So when you start looking at, VIX trades, so the volatility fell a little bit, but we're still in the 26 region. And the fact of the matter is, I'm having a tough time at this point, okay, pricing out volatility trades. But throughout the course of this next week, again, I'm not telling you that we're just going to turn around and just boom, start seeing some sell side activity here, right? I'm telling you that, okay, maybe we really have to have that again, quintessential rip your face off rally where things get nutty to the upside, right? The market has to buy back into the idea that we're going to go up. And in doing so, and that's why I'm telling you, I think there's going to be wonderful opportunities in VIX. And that is to take some VIX volatility spreads. That's when I go out and sell a couple of put spreads to finance the cost of call spreads. I'm going to be all over it. And I'm going to be out there. I'm going to be out there 53 days. I'm going to be out there 81 days. Okay. And why am I going to go out there in time? I'll tell you exactly why. Because I'm buying cheap volatility in the VIX itself. Okay. The VIX volatility is, again, it's inherently low. It's the lowest that the volatility in the VIX has been since the onset of the Corona crisis. All right, a couple of things over here. Bounce and fade, it's back. What does bounce and fade kind of mean? I'll show you specifically. There's a couple of bounce and fade trades I took throughout the course of this week. I'll start with like Lululemon. Come on, it's never a weekend update unless I mention Lulu. This is what I mean by bounce and fade. Okay, these wicked bounces, I fade them. And when I fade them, they pull back a little bit. It's a great way to be able to make, 30, 40, even 50% on an in-out spread, literally almost overnight. So I hit on Lulu. I also hit on Twitter. So if you take a look at Twitter, I can't type over here, but if you take a quick glance at over at Twitter, okay, Twitter, there's a great bounce and fade trade on this rip and peak to the upside. Actually faded it with a bearish in-out spread, pulled back in, pulled in 30% in less than a few hours time on an in-out spread. Again, bounce and fade trades are back, and that's what you want out of volatility. I mean, in volatility, okay, you don't necessarily have to be right. You don't have to be right. You just have to be in the marketplace. So, that when I say the quintessential bounce and fade, all right, most of the time I wait for the bounces and then I try to fade them. And listen, you don't know if the market's going to turn here. That marketplace could rip right back to 340. Give yourself a little time, though. Sooner or later, that thing will pull back in. And that's what volatility affords you the ability to do. So last again, but not least, we come to the SPX Expected Move. And the reason I bring up the SPX Expected Move, so again, I was mentioning this a little bit earlier, but last week we had an $83 expected move. And that, for the most part, amounts to, when I say an $83 expected move, all right, okay, that means from this point higher, you're looking for an $83 move up, from this point lower, okay, $83 down. That was the expected move last week. And one of the things that, again, it really resonated with me is, did we hit, $87 or $83? And it was huge. I mean, it was absolutely huge. We had, look at this, okay, that's a day we literally went from what? from one line to the other. That's the week started. I mean, that right there is an $83 move. The next day we actually had, again, a monstrosity move that literally led us basically from 3,200 all the way to 3,280. That's another $80 move. What do we have today? Move roughly from, and I'll give you just, again, rough estimate, 3,230 all the way up here to what? We actually cracked back into the 3,300 zone. Again, 3 consecutive days seeing, 70, 80 plus point moves. And the reason I'm mentioning this, why am I spending so much time on this? I'll tell you exactly why. Okay, take a look at the expected move for this next week of trade. It's $87. Okay, so once again, we're stuck in this, the catch 22. I am not selling option premium. I even put like, wow, really? Wow, really? Because it's $87, and we just had $87 plus moves in a day. And that's the SPX. That doesn't include like overnight trade like in the futures. Futures contracts move more than that. I mean, the futures contracts legitimately last night, traded all the way down, 32.11, 32.11, the gravity point, by the way, which I talked about on Wednesday night, all the way clear up to 3,300. I mean, come on, you have 100-point plus moves, and they're giving the expected move is $87. I'm sorry, I'm still buying option premium at this point in time. All right, so for the coming week, again, I don't believe a bottom is in. Okay, big tech doesn't say so. I believe that we're probably going to not only test into once again the 32.11, but it's going to take a little bit of time. There is absolutely some rip and rally that has to happen inside of these S&Ps, inside of the Nasdaq. And again, when you start looking at this, it has been effectively straight down. We haven't had that quintessential move to the upside. And am I looking at like 33.50 like it's got to be there? Sure, why not? Remember, the only levels I really look at are things like gravity points. What I'm going to give you a read on is much more quantitative read. We looked a little bit about volume. We looked at expected move. We looked at volatility. The fact that the monsters of tech and relationships didn't lead the sell side activity. Again, all of those lead me to believe bottom, it's not in. Big tech has got to say it. We've actually got to drive a little bit lower. And the Nasdaq, it's got to get decimated. With that, thanks everybody here for joining us on the Weekend Update. This is Don Kaufman over at TheoTrade. Have a wonderful weekend. Bye-bye.